Good morning, everyone. Welcome to Admiral Markets. My name is Chris. Today's focus is strategy, and we're going to dive into looking at the markets and the graphs and charts in just a second. First, be aware that this webinar is shown to a global audience, yet may not be suitable for everyone. Take a look at this link, select your country of residence, and contact an appropriate entity to find out more information about that. Also, just want to ask you, by the way, if you can hear me properly. Is the sound working well? Do you hear me at this moment, first of all? And great, perfect. Also be aware that trading for exchange and global financial markets is considered high risk, may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice, it's for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer. Plus, you're aware of the risk involved when trading. Alrighty, just wanted to let you know that Admiral Markets is heavily focused on creating the best IT information or software, let's say, possible for you by, amongst other things, the Supreme Edition, 60 extra features that make your trading easier, like money management tool, the sentiment index, the correlation trader, alarm manager, and a lot of extra features. So as you can imagine, there's 60 of them in total. So a lot of stuff there. Also, there's the ability to trade online. All right, that is very cool. Just very simple process, actually. What you have to do is go to trading platforms, click on MT4 Web Trader, you click on Launch, you log in with your data as you normally would with MT4, and you have already access. All right, so it's pretty easy to access. Also, when maybe you're not at home, or you're at home in a different room and you have other device with you, or you're outside of your home, you're on travel, you get the point. Very easy to still manage the trading. So that's a great plus, the IT stuff that we have here. And maybe one of the reasons why also Admiral Markets was nominated as the best broker, best MT4 broker in the UK of 2015. So find out more information about that on the website. We're going to take a look at the heat map. As always, just a quick look what's going on. Got some big movers above 1% or around 1%. So a lot more movement on Tuesday than Monday. That's not untypical. That's what we would expect. Most movement, as Nanette said last week, Thursday, is on Tuesday to Thursday. Those are the best movements. So we see euro odd strength and a lot of volatility. So that was the big one. We see pound Swissy downside, dollar Swissy, odd Swissy, New Zealand Swissy, CAD Swissy. So a lot of Swiss strength. All of these Swissies here, that's nothing I was really looking at. We got some yens on this side here, and here we have some Aussies and New Zealands as well. Euro dollar also plus 1%. CAD Swissy here, yeah. All right. Let's take a look at the calendar. There's not a lot of things, I mean, not major things going on this week, but we got our usual news events to take a look at here. You can see industrial production, manufacturing production for Great Britain, and Yellen testifying today, later today. So let's see what she has to say, but got some oil news, I guess. But yeah, time for the stocks, I would say. It's time for charts, sorry. Getting my words mixed up here. All right. Good, this is the euro odd. I don't really want to start with that one. Let's go to the euro dollar again. All right, so yesterday, as I said, I was not too keen on seeing price. I didn't expect price really to make that dip. It was possible, but I saw that the minimum ABC was already done, so I definitely thought that there could be a triangle. The triangle didn't even happen, actually. Price turned around earlier than I expected and started to move up. So as soon as we broke 112.50, for me, that was a point where I was interested in upside. So as soon as you got an hourly candle like this, that was the moment that I started to become interested. So, from that point of view, a retrace of the hourly candle, for instance, here, there was some pips to the upside, or looking at a 50-minute chart, right? And then saying, okay, or 5 for that matter, one of the two, and saying, okay, I'm looking for a bit of a correction, a bit of a bull flag, and there was a small trade up to the next level. Not a lot of profit there, but maybe some 50, 60 max pips potential there. for a move to the upside. Let's see, the target, well, we could have put, I don't know if we did that yesterday, but a fib like this, of course, don't forget you can always put a fib on that swing that you're trading, which is this one. This is the closest swing. And you can aim for, in that case, the minus 61.8 target, and that's where it stopped at 113.30. So that could have been a trade yesterday, about 50 pip trade there, intraday trade to the upside, right? That's the scenario that we were talking about if price breaks above 112.50. So that was a breakout yesterday. We didn't get the triangle, so we didn't get a bounce here nor here because we didn't get the bigger correction. So those were bounce trade ideas that obviously didn't happen because we had the breakout instead. All right, so let's clean it up a bit. And let me use a blank chart now. Just totally nothing here. And we can see that price is now kind of making a bit of a correction, right? Let's talk a bit about patterns. This obviously could easily become a bull flag pattern, especially obviously if price stays above this trend line like this. We've got a trend line here. We probably could even connect it here. All right, but we also have some broken resistances right here that become support as well. So we see some natural support at a level in this zone. And we can see that if we draw a flag, like this, there it is. All right, bottom of the flag could be approximately the same as the broken resistance, and that now became support or becomes support. And we can put a fib from here to here. And we see some fibs as well at the 38 and the 50. So obviously there's a lot of potential for price to bounce off 112.75 or 112.50. All right, so let me take off this fib. I think that you get the point. I just wanted to show you that there's confluence. But today I want to keep the chart as simple as possible in a way. So I'll take off this fib. But just wanted to show you the confluence. So definitely bullish territory, definitely in bouncing territory. This is definitely bouncing territory. And the stop loss, I think, could be sufficient below 112.40. I don't think we have to go, I wouldn't go much more below that. It bounces or it doesn't. I think that 112.50 is such a strong support level, at this moment at least, with all these factors included, that I don't see it break. It could break by 5 pips. We got to be careful. It could break by 8. That's why you don't want to go at 112.47. I wouldn't think that's good. But below 112.40 should be sufficient. Oh. Target. Now the minimum target I would expect today, I can take a look at the pivot points too, just to give a bit of confidence. But 113.80, 113.75 is the minimum target. But in the next days, it could go up to 115 as well. And 115 is a big resistance level. We talked about it yesterday on a higher time frame. Why? Because just quickly, we have resistance here. All right, so there we go. See? That's that resistance level on the daily chart. So that's the ultimate target, but I'm not sure if we'll get there necessarily today. I mean, it could be, but I don't want to be over optimistic. It could be in phases, and it could go up to 113.80, and then it kind of like makes a bull flag, and it goes up to 114.40, and then it kind of goes sideways and makes one more last dash up to almost 115, and then maybe we get this suddenly, right? And you kind of get a rising wedge pattern, and then okay, this upside is kind of dying out, then you get a break, and then boom, you get impulse to the downside, and before you know it, you're back at 112 with the bearish momentum. But first, we got some more upside, I think. So let's see. Roger has an order to go long into the previous high and fib, so I think probably the same point, and has a pretty has also a pretty tight stop loss, and has a target at 114.50. 114.50 is right at the 61.8 target, in fact, of this leg, which makes a lot of sense, just below that the big figure of 115, which I think is a smart target. I don't think it's totally agree with that. I don't think it's good to aim for 115, especially because your dollar likes quarter levels, like 114.75. So would definitely not necessarily go for the last inch of that target. We could put a fib from here to here on the 4-hour chart, by the way, too, and we see that there's another 61.8 target of this bigger swing. Wait, let me correct that. Hang on. Right there. And you see that we stopped at the 272 target of this one, too. And again, we got confluence, another target at the 114.50, the minus 61.8. We've got two minus 61.8 targets there, so that makes it even stronger. The 114.50 is becoming stronger and stronger like that. You can see it doesn't make sense to aim above that indeed. Let me take off this fib. All right. So we got a couple of ideas here that could work out, I think. Pending order at 112.60, stop loss 112.35, target 113, conservative target, well, more aggressive target 114.50, more conservative target 113.72. Or a split between those. Let's see, other idea, let me check a look here. Let's see where these targets are on the 50-minute chart. All right, other idea could be 112.70. We kind of almost touched that, in fact. We went to 112.75. This could be a pending order. This could be a market order right now, actually. It could be on the early side because we could drop down to that level. But or maybe just a tad more patient and wait for 112.70, which is these fibs here. But still the same stop loss, though. Stop loss does not change because there's that risk that, of course, price could tag it. So we don't want to. I don't want to put it too close, obviously, because then doesn't make sense in this context. So better to keep it here, even though the order is here and here. It doesn't matter, right? Doesn't matter if the entry is here or a bit lower. Stop loss is the same below the major support levels. At this moment, it's difficult to say. Let me take a look at let me take a look at where the pivot points are. We will have new pivot points in 2 minutes from now. How far can this go? At the moment, we're in a 5-minute impulse. So I think it's better to have a bit more patience at this moment. I don't think it makes sense now. Let's see how far this can push. As soon as a half an hour of candles do not break this bottom, well, then we might be in a situation where price starts to bounce. And we might not get that deep. We might not get to the 50 fib. So I would say the verdict is still waiting. And let's check this half an hour from now. We can see where the pivot points are 1 minute from now. And then a half an hour from now, I'd like to see where price is. And whether we had a price go like this in those half an hours, or is it going like this? The other scenario, if we don't catch, if I don't catch a, now let's get rid of those fibs again. We know where those levels are. And let's focus on this pattern again of a bull flag. Because we did break this bottom. So, the thing is that there is a chance that this, if we didn't break this bottom, it would be actually a triangle, wouldn't it? And then I would say there's a bigger chance of an immediate breakout. But for the moment, we broke this level, this support level. And therefore, it could become a bull flag after this break. So if it is a bull flag, we would expect price to get more closer to the bottom of that bull flag perhaps before bouncing and breaking again. So that's why I'm a bit cautious. Don't want to take it here. Let's wait on the 5-minute chart. Pivot is 112.60. 112.60. So that makes the pending order at 112.60 even stronger. Makes it, there's an extra confluence, makes it make more sense, right? Which is good. So maybe even 112.62 could be better, just to be on the cautious side here, I would say, because the pivot is right at 112.60. So that could be a pending order. Other idea could be a breakout of the bull flag, either now or if price makes the dash down and then starts to bounce and break. All right, so let's check 15 minutes from now again. Alrighty, pound USD. I would draw this trend line a tad different, like this, perhaps more. This is the trend line that I would like to see break today. We got a lot of fibs here. Basically, if price breaks out of this triangle to the downside, there could be a small breakout lower to the 61.8 fib, but there's not a lot of space. It would have to break, pull back, and continue to hit the 143 area. Not a lot of space. If it breaks to the upside, we'd like to see a pullback and continue. All right, so it's in a triangle, and we're waiting for a verdict where this triangle is going to break, like this. If it breaks to the downside, you can see there's another potential support level right here. That could be a bouncing area. If it breaks to the upside, then I think there's space up to the previous top, and then if it breaks that, up to the 50 fib and previous trend line, after which that could be a bouncing spot back down. All right, so pretty much the same as yesterday. Only the triangle is a bit more consolidated. It's a bit more clear, I would say. And but the levels and the potential breakouts and bounces are still the same, I would say. And nothing changed from that point of view. Why? Because price really did not do much. It was kind of like a choppy heartbeat day where price did an up, down, up, right? Something like this. It's really an expanding wedge type of day. If you keep an eye on the highs and keep an eye on these lows, you can see it's slowly but surely expanded price action throughout the day. That's an expanding wedge. I want to focus on chart patterns today a bit more. And this, within that expanding wedge, is within a contracting triangle. Now, you can debate if, you can use this line as well, by the way. I mean, it's all debatable where you use those lines, but all right. I hope that is the sound still good? Sound still good? Yeah, I think so. Good. We're not having any sound issues today, luckily. All right. Good to have you here, MJ. Hope to see you tomorrow too. We got a scaling out webinar, and have a great day. So both ways, this can go. One more thing, this can break both ways. We got momentum here, and we got momentum here. Let's see. Beverly's in a short 145.33. Great. Stop loss. That's a pretty big stop loss. Target 142.60, but the target is big too. About a one-to-one trade, 142.26. Yeah, right around this support level. Let's see. I see a big fib around 142.75 though. That's the only thing I'm a bit worried about, that target. 142.70. You're targeting the 88.6 fib, but that's already pretty deep. That's the only thing I would be worried about. Nothing maybe drastic I mean, don't have to change it at all, but that's what I think at the moment. But I think you're in a good position. If you have 145.33, I would definitely move it to break even, my personal opinion. Because the entry is here, so you can put it above this top. If that top breaks, there's going to be, we're in a breakout scenario to the upside. You could have a break, pull back, and continue. Personally, I wouldn't want to risk that many pips on this trade, personally. So I think it makes, and I think you have a great level here. It's a very logical level. It's a validation level. Once it breaks through it, you don't want to be in that trade, I think, or I wouldn't want to be in that trade. And you take off the risk off the table, risk-free trade, and price is in the top of the triangle, so there's a great chance it will still bounce to the downside. I think that's a great scenario for you. I think it's very good. You got a risk-free trade. You got, you know, triangle in your favor at the moment. But if it doesn't, you're out for nothing, right? No loss. Perfect. At this moment, this could easily be a bouncing spot. It's a bounce or break spot. I'm interested in the break, pullback, and trading the continuation. That's what I will be looking for, but not that much interested in trading this small triangle here. And it would be very hard pressed to find a trade to the downside, but it is possible somewhere around here to the target. But then primarily interested in bounce trade back up actually at around 142.70. All right, dollar yen. Price didn't get up to my 61.8 fib actually, and did post bullish candle. So we didn't get the scenario I was hoping for. I kind of bullish candle and then a doji. So from that point of view, we just kind of went sideways. We got a good 4-hour candle here. So if anyone took a short upon the retracement of that, the trade, I fully understand. Could have been a short somewhere in here, and you're about break even now. With a stop loss, well, probably above this candle high or this candle high. But at the moment, it looks to be in a bit of a trouble. We've got 6 candles going flat. This is becoming a consolidation zone. And I think it's a bit risky. Personally, I would not stay in this trade. Or I would put the stop loss just above this candle high. And we'll have to see how this breaks. If this breaks through support still, that could be a great breakout for further downside. But there's also potential if it breaks above these candles that there could be finally that move up to the resistance and then move down. So definitely still bearish, but not now. I would like to see it higher or lower as it breaks. You can see looking at price action, you got a couple of bullish candles. Obviously, strong bearish momentum prior to it, but we're definitely in a consolidation here at the moment. You can see it a bit better on the hourly chart, I think, here. Now you might say, this is at the top of a triangle, and yeah, that is true, and I would agree with that, definitely. But from the perspective of 4-hour chart, I think that it's getting into, from a time perspective, getting into a bit of a questionable area. Yeah, I agree with Roger how he formulated. There's a risk of this just going sideways and then making a move up. Or maybe Roger means a risk of a fake out when it breaks. That's possible too. In that case, I think that risk is less, personally, in my opinion. I thought that there is a risk that if it breaks here, we get a big correction before we move down, because that this could be a fake out. But I think if we get a break, pullback, continuation, that there's a good chance we really will continue further. The 114 is a strong 23.6 fib. So once we break that level, I think there's a decent chance of a move down to 113. Let's see, Roger says, breaks the below, I would wait to see if previous support becomes resistant and then enter. Yeah, it's never a bad idea. Totally agree with that. Is that you can wait for a good candle like this, and wait for a smaller correction like that, a bear flag, for instance, on a 5 or 15-minute chart before taking that break. That way, if you wait for a small little correction and then a break on the lower time frame, you know that there's no the chance of a fake out is lower. If you get a good candle close, a small correction, and then a break, it just reduces the chances. You kind of protect yourself against such a scenario of a false breakout. So that could be a good target to the 113, and that could be a good scenario for downside. If we don't get it, if we get this turns out to be a consolidation, and sometimes you get a spike out of a consolidation zone to the opposite side, right? Any upside break, I think, could just be a spike, hit resistance, and turn. Could easily be a fake out to the upside in a way, or whatever you want to call it. So bearish in both ways, and looking for price action to show a good candle close here, and showing price action to see some doji still or something like that, or an engulfing twin. Pretty big wick on the daily candle. Bullish candle on the pound USD, but an inside candle. Go either way. We're seeing some bullishness coming in the pound USD. Look at that. Interesting. All right. Well, if it pushes through 145, we're in bullish territory. And it looks like it's going to do that. It's already at 144.92. It's challenging this trend line. Doesn't look like we're going to get that much of a bounce back to the bottom of the triangle or even to the level. And that could happen. This could have been the end of the correction. And this is start of a new bullish momentum or breakout. But this was a very choppy beginning, but still. Euro dollar, almost 2 minutes now from the quarter that I talked about. 1, 2, 3, 4, 5, fifth candle. Doesn't look like it does look like this is over this momentum. Does look we made like a turnaround here, and we're challenging this trend line. So going to be very interesting. I think we're going to see that move up now. We might not even reach the pivot point on the euro dollar at 112.60. Might not go that deep, but let's see. First, we're at a small mini resistance here. So if we make a dip, this could be an interesting zone to go along right in here or upon the breakout. Or upon, yeah, I don't want to make it too complicated here. So let's check the euro dollar in a few minutes again. All right, pound yen. Same as the pound USD really, but a bit milder in its movement perhaps. Right, just made an up, then a down, then an up, then a down. And we put the fib from here to here, saying that if it gets back to these fibs, that could be interesting for short, but really made a shallow retracement down, 38.2 fib before it moved down, but now it's in a triangle like this. So same like the pound USD, if it breaks the triangle to the upside, I think it's still going to run into resistance. The ones that we talked about yesterday could be interesting short zones, and if it breaks the triangle to the downside, that could be also a breakout to the downside. With the pound yen, though, we got to be aware that the space to the downside is limited. We got support level right here. Big wick as well on the daily. So from that point of view, maybe seems more likely we'll get an upside and then hit resistance somewhere in here, I would say. This candle has not been squared up, which means has not been retraced, which means that if it does get retraced, I would say it's a decent chance of finding resistance at low level. This candle high, very important not to be broken. Otherwise, it's something else is going on. Yeah, I think the best one, because we are close to this bottom, best one is still a retracement. All right, got a bullish day even on the euro yen. Bit of a mixture here. Yesterday was bullish, obviously, making a zigzag up. Now, I didn't trade this, so I don't also remember exactly what we said yesterday, but I don't remember exactly. But anyhow, there was a zigzag that did occur, minus 61.8 target that got hit. That was a bouncing spot. I think we were saying that the bottom of this channel, wasn't it? That's what we were saying, the bottom of this channel maybe would be a resistance spot. Not 100% sure, but roughly stopped that. It actually went a bit through it, didn't it? Went even through the minus 61.8 target. It got all the way up. That can happen. Acceleration up to 130.25 before we had some downside. Let's make this. Let's clear this up a bit. Yeah, it still remains a lot of a mixed picture. I would say it's a very consolidating pair. I mean, on all time frames, we can see a lot of trend lines if we wanted to, and it's just not. It's just staying between support and resistance. There's really not much of a trending mode here at all. There's a lot of consolidation. 61.8 fib there. Doesn't look that interesting, but I think that if it breaks this trend line, it could be worth looking for a breakout or this support level probably. I don't see many trades here. Maybe I'm wrong, but doesn't look that interesting to me. You're talking about the pound yen, Beverly? Dollar yen moving down, pulling the pound yen down, but still in the triangle. Pound yen 2. Pound yen is the still before resistance, and euro dollar breaking actually. Looks very dramatic on the 5-minute chart. 1-minute chart does not look that dramatic. So it was going to be interesting to see at the top of this hour how this 1 hour chart looks like. I mean, if the candle is a bit bigger, something like this, I would consider that a breakout already, and a bit of a pullback on that candle perhaps, or even at the close of that candle, and that I think could be a good long. I would still be inclined to use a wider stop loss, but a tighter one might work now if depending on how good we break it. It's a bit subjective here. A candle like this would not be enough for me to put the stop loss here because I'd still be cautious of the bigger dip. But the bigger this candle becomes, the less likely we're going to get the bigger retracement. The dollar yen. Let's see. Yes, indeed. It's definitely having trouble. Going sideways for a lot of candles. Sixth candle was a doji, so it's still, I would say, hanging in the air, but the chances of it getting a bigger correction are increasing. But I would say this candle is still important. This is the sixth was a doji, so it really doesn't give us any information there, up or down. So because of that, I would say still caution. But if it breaks obviously this trend line, then we know which direction it's going. It could do both, I would say at the moment. All right, Aussie made a bit of a smaller pullback, then still made more downside, and now is making upside. So for those that were a bit cautious with this trade, it made sense, as you can see, because yeah, it is a lot of choppiness here. That didn't change. Did that turn out to be rejection and resistance, and did make one more downside for about 70 pips, but didn't go a lot further than that. It wasn't a massive breakout either, right? It was a small little continuation, but then we still are seeing a retracement. So I think we can move the fib now down to all the way here. And I would say that this is still a good area around the 61.8 fib. Yesterday was the 50, and we could still see potential head and shoulders like that. So I think that's a potential reversal pattern that could play out. So I'm curious, going to keep an eye on this 71.40 area for a for a bounce, bearish bounce for downside. That's my trade idea. A pending order could work well, but I would go with the stop loss, well, either above the 78.6 fib or above the top. It's, it's possible. It's nothing wrong with the pending order there. I think I'll just, because I can keep an eye on the charts, I'll just keep an eye on the charts and see how price reacts to that level myself. Obviously, a pattern like this, of course, is also speculative and doesn't have to be a pattern like that. And price could gain more momentum than we expect. That's why I like to keep an eye on it, personally. Got a big wick here. And if we had a fib like that, you can see there's a target at the 61.8 fib. There's confluence there. But once again, I would like to see a reaction at that level. But that's the zone I'm keeping a close eye on. Yeah, indeed. I'm expecting a head and shoulders and continuation down. Let me get rid of everything here. And the reason is, let's focus on patterns. One of the things is the break of this triangle. Break. This could be a pullback, and this could be the continuation. So we're in the, maybe we already had the pullback, maybe we're in the continuation part. Clear downtrend, and well, of course, you never know. The trend could always finish at one point, and you could even draw a trend line like that. Gives even more, reason to expect a bounce, which it did. An epochs here. So from that point of view, if we then add this trend line here and we say, okay, we broke this support. We could even put a support like this. And we had a break, but the break didn't go all too far, so got to be careful with that too. But okay, we had that break there, and put a line like that. All right. So from that point of view, this I think could easily be a hook back indeed. And if we see a turn here, that could be an interesting move to retest this bottom. But if something else happens, and let's say price pushes further than we expect, and for whatever reason really starts to accelerate, it would be difficult to trade for me to the upside, but then obviously the bearishness would be out of the window, and depending on how far it goes, and we get a new triangle like this, then I would be looking for upside as that triangle breaks. I'm not going to trade it to the upside in front of resistance like this. So it has to break above that resistance and then pull back and continue. I can see why you would expect that on the pound dollar, and there are definitely good reasons. I mean, that's what I said on Monday too. There are definitely good reasons to look for shorts somewhere in here, right? I was talking about had a fib on, I think like this, and said, well, I can go back to these fibs and then turn around and go to the targets. went only to the first, not to the second. And then is the question, how far will it correct? I mean, is this the 38.2 fib bounce and then it's a downtrend? Or will it still correct further to the 50 fib? Both are really just as realistic. Actually, beforehand, the 38.2 fib makes more sense. Beforehand. But after price bounced off the 38.2 fib, and I started to see how this move was moving down like this, maybe it became more evenly distributed because it wasn't moving all too smoothly. Although, yeah, so especially if you get price stopping here like this, right here yesterday. But yeah, it's still, both fibs are just, it's tough to say. Both fibs could be used, and we really don't know beforehand. We got to see how price reacts to the 38.2 fib and then make an assumption and guess. And it was a good short, but you're just unlucky. You're just unlucky that price is probably seems like it's going to retest the higher fib. Daily chart, you can see this is a big consolidation, and the consolidation went up to this fib, started to turn around, but you never know. It could continue that consolidation before we get a bigger push down. One of the things that makes another reason why maybe the 50 fib was more likely, by the way, at the beginning of this week, I forgot about that, is the weekly fib, weekly candle. When you look at the weekly candle, you can see a clear bullish candle with only a bit of a wick. Was one of the reasons at the beginning of this week where I thought, okay, a retracement of that weekly candle, we could see a bounce and move up to the 50 fib. I think that's what I said on Monday as well, that, this, we're going to get a correction down and we'll find support for upside. Yeah, I'm pretty sure that I said it on Monday. So we found support a bit sooner than I expected, perhaps, but there were two areas that could have been it used the first one. So, but let's see, we're not there. I didn't even break this level, so we're kind of talking a bit too soon, but the weekly candle does kind of, I think, support the idea of this and this. Yeah, looking at the weekly candle, I think, is always good. Definitely recommendable. So that's a bit of a difference with the Aussie pound, therefore looking like it could have a bigger correction, that the bearishness was actually a correction for a bigger correction up, and then we'll see the downtrend perhaps continue. Whereas the Aussie, I think, well, obviously it could, if the dollar is weakening, that could happen with the Aussie too, the AUSD, and that could be one of the reasons why we want to be a bit more cautious. We don't know how far this could push up. But anywhere, I would say, below this level still is certainly bearish, and below this level is a neutral zone. This is neutral zone. Above is bullish territory, and below it is bearish territory. So even though it could push up, I would say any of these levels could still be very interesting turnaround potentials in bearish territory. All right, your dollar, good. We keep an eye on this 1 hour candle. Look at this, totally look different now. So we have to really keep an eye on the close of this candle. Look at that, totally reversing at the moment, spinning around, showing momentum, perhaps potential for momentum, and boom, getting rejected. So let's see, maybe 112.60 is still in the cards at the moment. Going very fast now down, so it's good we're patient here. And let's keep an eye on this. All right, nothing new on these other charts, so let's move on. Kiwi talked about the fact that bigger trend is down, but we're now, when it's, despite the fact that it's moving down within a bigger downtrend, we've had such a correction to the upside that we're in a way in an uptrend on this 4 hour chart, aren't we? So when we move down, we can find support as well, which did happen yesterday, my afternoonish, right? And we're seeing a bit of a bounce at the moment. Looking at bullish price action here at least. A couple of candles down, but those all stay within this candle, as you can see. So this is the master candle still. So a break of that high with stop loss below here could be a setup with a target at the tops here, for instance, or at the 88.6 fib and trendline confluence, and trail stopping most of these candle lows. Could be one trade. Let's see. Let me take a look here on the daily. Let's get rid of this fib. We know where the fib levels are. Not a bad idea, but perhaps we can see a triangle here too on the QE and a break, and this could be a pullback. I don't know, looks better. Obviously, the Aussie I'm not taking to the upside. The Kiwi could be slightly different because we got resistance up in here, we got support here. So we're closer to support than resistance. So it makes it a bit different than the Aussie, definitely. Could be possible. Not jumping for joy, as you can see. Let's see if maybe something else is a tad better. Also, of course, the looking for Aussie short and Kiwi upside is a bit contradictory to each other in a certain way. New Zealand might explain that difference, but there is a bit of a contradiction there, so that's something to be careful of. So let's go to the daily, the dollar CAD. Yeah, we can take a look at New Zealand CAD, I think. I hope I have it. Let's see. Yeah. Well, well, well. Got a bit of a corrective formation here going on a 4-hour chart. Of course, that looks like a downtrend, but on daily chart, that looks like we just made an ABC zigzag to the downside here. Like this, and you can see hit the 61.8 target. Perfect golden ratio trade or move from the 61.8 golden ratio to the 61.8 target. Very sweet. And this could easily be a zigzag correction after we've had a bullishness here. And we're still above this top. Bouncing off the 50 fib as well, roughly. So from that point of view, it looks bullish on the daily. 4-hour chart, this is a channel to the downside, of course, but we're making a triangle like this as well. So looks pretty interesting. We've got a consolidation box here as well. Some momentum before it. So we got a triangle where we got a bull flag. So if we break above this level, I think we're breaking a bull flag, a triangle, and a consolidation, and this could be a good daily breakout to the upside. Yes, I agree with you, Beverly. That makes a lot of sense to me. I think that's a good idea and could be worth a pending, or if not a pending, a market order when it makes a good candle close like this, and then maybe wait for a small little pullback here. That could be already enough for a long. Yeah, that makes a lot of sense. Stop loss with a pending, I would go probably below this bottom, below 91.30. And the pending itself, well, kind of tricky because you got a lot of levels kind of just close to each other here. Engulfing twins on the weekly, another good signal, by the way. Engulfing twins. By the way, engulfing twins, and then looking at 1, 2, 3, 4, 5 candles not break, and this is the 6th, is another, I would say, confirmation that this momentum is over. So that's another good reason, I think. And if one is a bit more aggressive, it could have been even a reversal trade off of these fibs, but that's a bit more risky, of course. I don't think yesterday's high, a long above yesterday's high might be already sufficient. 92.40 perhaps, 92.44. I know that there's other resistances here, but that might be a bit too soon. Maybe 92, it's difficult. 92, because there's so many levels here, maybe pending a market order is better. Pending, perhaps, I don't know. I'm not a big fan of pendings anyhow, but 92.80 maybe we go all the way above here. That's one way of doing it, but that would be the risk. I don't know. I like the idea of keeping an eye on price action, seeing how it can break through this resistance or not. How does the candle look like when it's going through it? The other idea could be a pending here, perhaps a bit lower, but it's kind of messy there, so it's not as easy to pinpoint a level, I would say. Well, New Zealand to me looks like a bouncing spot. I mean, you got a potential head and shoulders, inverse head and shoulders like this. You got the time factor here as well. Obviously, let's see. Yeah, you got plenty of candles here that says that this momentum is over. You got the head and shoulders potential as well. So it does look like a bouncing spot, but of course we never know. So from that point of view, it could be good to get a break of, well, let's say this trend line, or that's not a confirmed trend line. Not easy to draw a trend line on this one, but perhaps just above this top. Does look like a bounce spot. And perhaps on the lower time frame, we can see the potential for a break like this. Yeah, if we break that resistance, that could be a breakout up to this resistance and then perhaps higher. All right, looks like there could be a bit more Aussie strength. That's worrying for the odd weakness in New Zealand strength trade there. So that might be something to be cautious of. At the moment, price is moving lower. We do see this on the 4-hour chart, right? But considering the support nearby, I'm a bit worried about that. So I'm going to review those trades again when looking at this odd New Zealand. Maybe there's something else going on. Let's take a look. Let's make a completed circle here and take a look at the euro odd and pound odd. What kind of patterns can we see here? Bull flag on the weekly at this moment, isn't it? But it could be a downward channel as well. We don't know. We did break below this long-term support level, so that's something to be aware of. We're right at the hook back point in a way. We're also below this trend line here. So a bit of a mixture here, a bit of a mess. What is it going to be? Is it going to be a channel that breaks to the upside? Or is this actually a hook back of the break of the long term and we stay in this channel? Got a mini head and shoulders here anyway. But a break of this line, I'm not sure. I think that's a bit risky. It's possible maybe. Let's see, we got some momentum here. Let's take a look at the lower time frames. I think it's too much mixture. I think it's not really. I would rather wait for more clarity. Really a push down, pull back and continue, or really a push up and pull back and continue. All right. Well, we're certainly in upside momentum on the euro odd. We got this is the fifth candle at this moment. We're right up in resistance. Got a bit of a wick yesterday. Could have been reasons to look for shorts, but now it's a bit too late. Now it's already moving up, down, sorry. And we kind of had this zigzag. So looking from that point of view at a resistance spot at these fibs, when you see a bit of rejection like this, and then a triangle, right? Look at this, a bit of a flag like that, some move down, some momentum, right? You get a bit of correction, corrective. That could be reasons to look for a reversal, and that's working out in your favor in that case. But at this moment, I don't think there's really much to trade. It's getting closer to these targets. And in fact, if anything, the minus 61.8 target could be a bouncing spot. Let's see. The S1 is 157.65. Yeah. Well, what could happen is if this candle prints, a bit of correction of that candle brings the situation a bit better for a short, because then you're going to get a discount there. There's more space down to the target, stop loss above. That could make sense. It's a reversal trade, but could work out well. But I would like to see a strong candle close here. Swiss is showing a lot of strength at the moment. I don't see much of a trade. So anyhow, let's take a look at the euro dollar. Let me recap everything here and see which trade I think could be working out the best. At the moment, I'm not seeing a ton of things that I find very, very interesting. I think all in all, I think that the euro dollar is the winner, really, to be honest. I don't see anything beating that at the moment. And doesn't mean that therefore the euro dollar will be a winner. Not at all, but I think it is the one that makes the most sense. I was looking, but at the moment I really don't see anything beating this potential here. And in fact, 112.60 got already hit. It went down to 112.55. So 112.55.62 got hit already as well, of course. So it's now up a few pips. So let's see how this goes. Do we get a bounce here or not? Or could it go even to 112.50? Time will tell. That is the best trade, I think, at the moment. It could, eke down a little bit, if that's a word, eke, I don't know, or inch down a little bit, and hit that 112.50 and then bounce. Hopefully bounce. Hopefully it does, right? But we never know. And let's see if we get that push up. Pending order, I was thinking about a pending order at 112.60 or 112.62, which is, a couple of pips lower than what it is now. And with the stop loss at 112.35 and a target at 113.75 and a secondary target at 114.50. However, of course, yeah, this could be a bouncing spot. The other solution is, if you don't like pending orders that much, is to wait on a 5-minute chart. We got one candle not breaking this low. We need 5 more, and then we should have weakness, and we could get a bounce somewhere in here, and then later on the breakout. That would be an alternative to pending order. Because yeah, we do have some serious 5-minute candles pushing lower. Of course, it's only a 5-minute chart, so not necessarily something that we should panic about. They're only 5-minute candles, but yeah, they are showing some strength to the downside. So that could be an alternative. Keeping an eye on this 5-minute chart and seeing how far it can ride lower before we get a break of 5 to 6 candles. Right? It could push lower. We don't know how far this can push. Then we get maybe something like this, and then like that, and before you know it, you're an hour later, you got a hook back, and that could be a better buy. So that's something remains to be seen. But I still stand, obviously, even though price is moving down, this is what we were expecting. This is what we were actually been hoping for, that it would move down. So, that's good. Now the question is, will it bounce? We don't know. I see a lot of confluence, so I think there's a good chance it will. Let's see. Pound USD still not breaking this top. That's one of the probably the second best one. Is a break pullback continue somewhere along here or here? That could be a good trade today too. I think that's the second best trade. Dollar yen could be the third best trade from here or from here. Breakout or pullback. Pound yen perhaps a bounce at resistance 2. Aussie as well, but getting a little excited about this Aussie just because if I look at the other pictures, I look at Euro odd, I look at odd New Zealand, I'm getting a bit cautious about it, but still, if there's a good bounce, good candle formations here, it could still be worth it. Not interested in the Kiwi breakout pending order at all anymore. I think that considering the odd New Zealand, not interested in that. New Zealand CAD could be a good breakout too to the upside, right? That was a good one as well. That's on the same level as the Euro and Pound USD. Dollar CAD still could be a good breakout too. We talked about that yesterday. This trend line still not broken, but if it breaks, that could be good. And I would say that's probably the recap, I would say, for today. Does anyone have any questions by any chance? Any further inquiries, or you want to take a look at a trade setup that you like or are in, or that you would like my opinion on regarding management perhaps? Tomorrow we're going to, or tonight, the Nenet has a Q&A on price action trading school. Tomorrow we're going to take a look at scaling in and scaling out, the second part. Yen. All right. Price didn't get up to my little green arrow here to the downside. That's where I was looking for a short at 82.70, but it didn't get there. I had a fib on like this, was hoping for a zigzag. All right, we didn't get the zigzag at all, just going sideways. In fact, it broke this bottom, so we can take that off. And we're getting a bit of a zigzag, a bit of a, triangle like this. All right, but still, I think that the 8270 could be a good zone for a potential short. However, I also have to say, considering the fact that 1, 2, 3, 4, 5 candles already have not broken this bottom, I gotta also be on my guard that this momentum is finished or is almost finished. And if we start breaking this resistance, it could be actually a breakout. We might have opposite psychology. We might be in a bullish breakout uh, to the upside. It would be a reversal breakout, but still. And if we break this triangle, there could be enough space for an interesting trade to that target, in fact, right? So from that point of view, there could be an intraday upside breakout. Let me double check this idea. Let's see. A more cautionary way of approaching this could be to wait for this 4-hour candle and to see if it turns out something like this with a close near the high. If it's a bullish candle like that is able to break above this resistance, 81.60-ish, I think, with a close near the high, I think that could be a signal that we are going to go higher. Yes, let's see. The recording is available on YouTube. So you can find youtube.com, go to Admiral Markets YouTube channel, and you'll find the webinar recordings there. Would that help? Would that help you, Natalia? But I have to still be, one cautionary thing though is that that's the 61.8 target is the fact that this is a reversal trade, has always been more risk. And could be a bit of a choppy up move, right? Before it might hit that, make a rising wedge, and then or whatever a channel, and then start to move down again. So got to keep an eye on the fact that this could just be a smaller correction for the moment. So that's just the extra heads up there or warning. Let's see. Well, I think that's it from my side for the moment. No other questions. I see we're really getting close to the pound USD pushing above this this level, and if a hourly candle looks like this, that might be just the signal it needs to make that small little push extra. So I think that the breakout day today will make sense in the pound USD, and I think there's a good chance of your dollar turning around. We talked about it already, so yeah, that's it from my side. Thanks so much for joining us today, or me today, and hope to see you later with Nanette in the price action trading school, and together on Thursday scaling in and out. And wish you good trading. Cheers.